This is the Retirement Key Podcast with Pat Volk, financial advisor of Abich Financial Services.
And I'm Heather Branch, here with Pat, asking for his insight on how you can better prepare for your financial future. TheRetirementKey.com is where you can go to begin your own conversation with the entire team at Abich Financial Services. Of course, we have links posted in the show notes, so you can just click there as well. Or again, find us anytime at TheRetirementKey.com. All right, Pat. So the joke is always when it comes to financials and stocks and investing is that nobody has a crystal ball, yet everybody tries to predict the future. It's this big conundrum.
Actually, I do have a crystal ball.
Excellent. And what does it say, sir?
It says nothing. It's actually, my client gave it to me.
Oh, really?
Yes, because I was at a party and I got up and I said, I don't have a crystal ball. So the next time she came in for her
she said,
review,
here you go.
She brought me a crystal ball and she goes, now you have one.
Now you have one. Whether or not it tells you anything is an entirely different subject.
Not much. Just the refraction of light.
It's just right. It's just, it shines some pretty rainbows around the office when the sun hits it. Got it. Okay. So let's talk about, I guess, just some immediate circumstances and then try to understand what it might mean for the new year, because talk about you can't predict the future, but everybody is saying, oh, the rates are going to get cut at least 3 times this in 2024. We did see a great rally in the market in November. Some believe we are set up for a great start for 2024 with the Fed lowering interest rates. There's that prediction again. We haven't seen actual lowering yet. We've seen them holding at not raising anymore, which is a good sign. But not everybody is on board with this thinking, Pat. Here is economist Donald Luskin on Fox Business.
I think probably sometime late first quarter of next year, second quarter, we're going to have a severe correction in stocks. It will be a viable dip. There will be deflation, but deflation will be just what we need after the big inflation.
So do you see all of this as a sort of calm before the storm? Does it change strategies to how you are working to help people perhaps be more defensive? What are your thoughts?
Well, calm before the storm, I think you would really want to consider what your destination is.
Okay.
Now, if I'm a younger individual, all right, calm before the storm. There may be great buying opportunities. I may want to be a little bit more of a speculator because here's going to be the potentially volatile time. However, if I'm a little bit older and I am very near retirement, possibly in retirement, I shouldn't really need to be changing my portfolio that much.
Okay.
I should have entered in with a rather, healed asset allocation. I should not really be too worried because I should have a part of my portfolio that's going to be generating income, whether times are good or bad. And then the other dollars in the market, I should definitively have a longer term time frame. I would say a 3-year time frame.
Got it.
If you're putting things in the market, generally, the markets are not definitively positive. If you remember 2000, we had 3 negative years in a row. 2008, we had a loss of over 38%. And it takes 3 to 5 years to recover from downturns such as that. We had 2022, again, down maybe just about 19-20% for the year. 2023, very frankly, was very unusual. We're coming off of 11 interest rate hikes. But this is a transition phase.
Okay.
We, in 2008, lowered interest rates basically to zero, kept them virtually low for 15 years, engaged in quantitative easing, injected $7 trillion into the economy. That takes a lot of time to exit the system. It took 15 years to build it up. It's almost as if, you go to the gym and, you look at the really pumped person. You're like, how long is it going to take me to look like that?
It's got a long time.
It's like, well, how long did it take you to look like this?
Right.
It's like, how long did it take us to get the economy into this position? And they are trying to turn the ship. They are saying, let's raise interest rates. So let's engage in quantitative tightening. So right now we're in this pause. They're not raising interest rates. They're not lowering interest rates. And this is where we get a lot of the talking heads. Hey, we're going to have a soft landing. Job numbers are still coming in pretty good. GDP seems to be a little bit more positive here. Earnings are maybe a little bit of a mixed bag, but we're doing okay. Jobs look good. GDP's decent. We're probably in for a soft landing. Other folks on the other side are going to come back and say, guys, this is just, there's a shark under there. It's just waiting to pop. The amount of debt that we're incurring as a nation, we're $33 trillion in.
Yeah.
We have a $2 trillion deficit. We're going to be issuing more. How, are they ever going to be able to lower interest rates, without truly crashing this economy and throwing inflation up through the roof?
Yeah.
That is another point.
Okay.
So my thought is nobody knows.
Yep.
Let's take this and look at what is it you're trying to accomplish with your portfolio.
Okay.
Are you accomplishing income? Are you looking for stability? Now, this is a good time to do that. Or are you looking for growth?
Because of the high interest rates, right?
Correct.
Yeah. Okay.
So, my thought is that did your destination change? Did the purpose of these dollars change? Is taking more risk, is that definitively the right move for you?
Yeah.
If you receive a 10% rate of return that's next year because you allocated more aggressively, is that going to change your lifestyle? Because if you're chasing that and God forbid maybe you lose, is that going to change your lifestyle?
Right.
And that's really what you call hedonic risk. People feel losses, and the feeling of pain is greater on a loss than it is on a gain.
It's like comedians always say when they have like a great night or a great set or a great joke, but every comedian bombs, and they say the highest high is never as low as the lowest low. It's the same with financial investing.
And it's the same thing because people always say, I want that high rate of return. Well, that just doesn't come free. That has risk associated with it.
Yep.
And, if I knew exactly what the market was going to do, I'd be in Tahiti.
Right.
No offense.
We wouldn't be here doing this podcast, neither of us.
Exactly. And it's not as if we don't live in the same waters. We're concerned. We see what's happening.
Yep.
And we just, want to monitor this. We want to make sure your portfolio is set appropriately to begin with. So you're not caught up in all of the tumult that may occur. The whole idea is let the market do well. I'm going to do okay. Let the market do poorly. I'm not necessarily happy, but I'm going to be able to get through that. And I'm going to be able to live the rest of my life. We have bigger things to worry about.
Yeah. And that's the thing I think that's so important because with all of the things that have happened over the course of the past 5 years, for somebody who is in their late 50s, early 60s, or maybe in their late 60s, they've already retired. I think these people are really, their brains are swimming right now with questions and how do I make this work? And what should we expect moving forward now? That kind of thing. So for somebody who is just retired, just getting ready to retire, this is why it's so important to do the things that you are saying to do, Pat. It's like, let's build a plan that will sustain no matter what. Because the other thing is also, as we face longer retirements, a lot of people, it used to be when you retired, you were thinking 10 or 15 years left of your life. And now we're looking at 20, 30, sometimes 40 years of retirement. Think about the last 40 years of the economy and the market, what's happened. You can experience a lot of things in your retirement years. Again, it requires more safety in our plans now more than ever.
Yes. And I would say don't let the perfect be the enemy of the good. Look at all of the options available. Don't look at things with a bias. Oh, you should do this yourself. Never buy this. Never do that. Explore. Ask yourself, why are these messages out there?
Yeah.
Why should I do it myself? As far as products, explore the good and the bad. There are some bad products out there.
Yep.
I would not deny that, but there are some really good ones.
Yep.
And I would say the annuity is probably the product that I hear most people say, oh, I haven't heard anything good about those.
Right.
Well, they're not perfect. They're not for everyone. I would agree.
Neither are stock investments, though.
Exactly.
Neither is cash.
But to come in and say, here's a completely diverse, very, difficult to understand product line, and they're all bad.
Right.
Come on.
It's not fair.
That's not fair.
Yeah.
Are some of them bad? Yes.
Yep.
Not all of them.
Right.
So, and there are some folks where it truly fits the bill. And unfortunately, you may see them hesitate. It's like nobody cares. This isn't going out on the internet.
That's right.
You
don't have to tell
an
any of
annuity.
your friends. Right.
Nobody needs to know.
Yep.
But if it allows you to have a comfortable retirement, have that guaranteed income.
Yeah.
That's perfect.
Yep.
Again, what we're trying to do is take a very small footprint. So I'll just use a very simple example. I did this just for a client the other day. Had about $2 million accumulated for retirement. We were able to take $1 million and squeeze as much income out of 50% of that portfolio to truly, with their Social Security and with this guaranteed income, their retirement needs were set for the rest of their life.
Wow. And
we still had $1 million set over on the side that they could just dip into if they needed to fix the house, go on a great vacation, do whatever they wanted
to stay in stocks. They can have risk. They can create a legacy.
But if a lot of folks came in and said, well, I heard those are no good.
Yeah.
Well, I don't know where anybody else would be able to replicate that amount of leverage on a small amount of assets. It's an incredible plan.
What I hear you saying is that we all need to stay open.
Yes.
Yeah.
Very much so. And let's not say where the market's going. I'm not a doom and gloomer. I don't think this is the apocalypse.
Right.
I do believe this is just just a deviation of the pendulum.
Got it.
We swing one direction, we swing the other, and these points of transition are always very angst-ridden.
They're always
People get concerned.
Yeah. People get concerned, but here's the thing. There's always going to be swings. There's always going to be questions. There's always going to be concerns. When it comes to your retirement plan, the goal is to eliminate as much of that uncertainty as possible. And that's what Pat and the entire team at Abich Financial Services, they are here to help you figure out in a plan of your own. So get started today. Visit us at theretirementkey.com and get to work creating your plan for this second phase of your financial life, which you worked so hard to get to, your retirement years. We also have links posted in the show notes, so you can just click there, or again, find us anytime at theretirementkey.com.
Thanks for listening to the Retirement Key Podcast. Be sure to listen to the Retirement Key Radio Show, Saturdays and Sundays on WMAL.
Investment advisory services offered through Abich Financial Wealth Management, LLC, number 310633, a registered investment advisor firm. Financial professionals are not licensed in all 50 states. To find out if Abich Financial Services is licensed in your state, please call 571-577-9968. Abich Financial Services is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Abich Financial Services, Inc., Virginia Insurance License number 127820.